Yeah, thanks, David. And thanks to Headley for that great insight into where the gold market's going at the moment. Just to further touch on that, we listed this vehicle, this company, just under 2 years ago. And when we did, the gold price was about US $1,000 less than it is today. Um, and really, once you start developing some real value in the ground, to further Headley's point about getting in early, ours have dropped mid-March. We were 9.5 cents. The following day, we went to 19.5. So I really do think you've got to find some good explorers, good developers, and good miners. And I think we've got a few in this belt coming through now. If we can just scoot through, we're going to focus on the Crawford Gold Project. That's our main project. There we go. So we actually have three project areas. Leonora, which is a very mine advanced, near-ready mining project at Crawford. We've got some history of nickel and gold at Ellis Rock and the other gold mine potential at Hidden Jewel. We're going to focus on the near-term project at Crawford. We've got 117.8 thousand ounces out there in the surface gold in the resource. It's bulk, low grade. It also means free dig and easy to mill. We drilled that December, so some 5 months after listing, we had a resource upgrade on that. 25% inside free dig material, and we got some really great heat leach recoveries, I think topping out at 92.7%. We focused on stage one, which is Crawford, which we'll get to shortly. We're looking to create an ore reserve we could get into and monetize quickly for the company to really sort of fill the coffers and then start developing that project and our further gold projects in the area. Next slide, please, David. I'll scoot through some of these because we are time constrained, but that's the resource breakdown and ore reserve as it currently sits. You'll see most of our resource is in the oxide. Next slide, please. Yep, so focusing on gold, this is all about today. So we're looking to get that high margin oxide only ore reserve for stage one out. And we'll get into that now, maybe just flick through the intro screen here. Awesome. This is where we're sitting in the world, Leonora. It's known some gold mines in its day, and it still has some now. It's centrally located, obviously. There's some substantial M&A activity with Rowland there with Genesis and Kin, and Silver Lake and Red 5 at the moment. It is a tier one mining region here, not, but they've been mining out there for over 100 years. We are 40 km to the east of Leonora, the Crawford project. That's our main project. We've got a sealed highway. We've got access to grid power, great quality groundwater. It's in a graben. We've got town accommodation and provisioning if required, and it's pretty easy to get to. We've also got guys in the area that know how to provide mining services. So it ticks all the boxes for a standalone mine site. We go again, please. So this is what we're looking at the moment. We are Crawford is a highly advanced near mine ready project. You can see on the left there what we've completed to date. There's been 8,300 meters exploration RC drilling. That's in addition to the 2,300 that was drilled historically. I think it's important to note that this particular area was being privately developed by myself and another consortium. And when we find it, we'll find it just a bit hard to get into the lines, the mills in the area. So we thought we'd list it, do it some justice, expand the resource, which we did, and then look at heat leaching ourselves, which is where we are now. So a lot of the work's already been done. We completed the pre-feed study this year, and we've also commenced the mining approval phase. You can see the resource there, 3.75 million tonnes at 1 gram. It is low grade, but it's bulk, low grade near surface. And you see some of the intercepts we're getting there from the extension drilling. I'll touch on Miranda now, but I think we'll finish on that. That area was discovered via us and our extensional drilling in 2022. And we've got about 500 meters of strike on top of another 200 meters to the north and about 200 meters to the south to extend. And we've really targeted that high confidence indicated 99.8% indicated 3D oxide resource. So not only are we sure it's there, it always sure can be, it's also deep, shallow, and easy to process. Speaking of, can we go to the next one, please, David? I'll just skip through this. Basically, we've assumed conservative PFS parameters. One of those ones you'll see there is the sell price of 2,900 Australian an ounce. I think it's bumping around 3,500 at the moment. we also assume pretty high processing costs for what is a heap leach and a straight out flat recovery, which again isn't quite right. You'll get increased recoveries over time with a heap leach pad. Next one, please. Lovely. So here's what the pit sort of looks like in 3 dimensions. You can see we've got nice big thick zones of super G material there. It's not really difficult from a mining perspective, pretty straightforward. We've just applied a standard 90-ton fleet to go in and mine this out in 2 stages. Obviously we start in the north, which is a bit shallower, as you can see on the left-hand picture there. So we can start getting some feed onto the pad and start leaching some gold. At this stage, we're hoping to be mining pre-Christmas and producing or pouring gold in Q2 2025. Next one, please, David. Okay, so here's the physicals. I won't stay too long on this. We've already gone through it, and I've got to hurry along. Maybe the next one. And again, anyone interested, please come back and circle back and have a look at these life of mine schedules. We can scoot again, one more. Okay, just touching on the metallurgy. So we've done 3 different phases out there at Crawford. We had some basic oil testing done right through to 2 lots of fairly intense column leach trials. And, we're getting from 77.4 to 92.5% gold extraction. The thing to note from that is the number of days leaching averaged about 15 days. We turned it off after 45 for the testing. We didn't really need to keep it on anymore. So it recovered very well. The material there is low cyanide consumption. It's got low amounts of cement required for agglomeration and percolation. pH is great because it's in a graben. It's a well-worn water area. Low contaminants, so we're not going to pour any orange bars. And it's minimal crushing requirements. So ticks all the boxes from a processing and metallurgical perspective. Next one, please, David. Right, for those interested, that's the flow sheet. Some that may look rather complex. It's actually very simple. We've only got 1 crusher currently in plan for the PFS. Most of the material, as I said, 75% is oxide. We envision 0 blasting. Anything we might have to put a rifter down there on the end of the dozer near the end of the project. But what we're really wanting to do is open up that easy stage 1 pit, have a look, monetize it, and then start extending the project out further along that strike that you can see there on the right-hand side. David. Okay, the key highlights, probably just the first. So the stage 1 highlights, total mine life is 12 months, payback within 3 months. Stage 1 oxide gross revenue of 68 million. That's based on a 2,900 Australian sell price. We have low C1 all-in sustaining costs. The normal average New Zealand Australians around about 1,900 remember. With CapEx being that it's a heap leach setup. So we're looking at 18 million inclusive of capital costs and an IRR of 130%. So that's with a 12-month mine life at stage 1 oxide. By the time we look at rolling around to stage 2, once the extensions have been done, we would, of course, be still processing from heap leach. That heap leach material that's being processed and poured is paying for the pre-strip for stage 2, etc. So it just keeps rolling along. You can see some of the parameters that we use down the bottom. I've touched on those before, but again, fairly conservative. Last one, I think, David. Lovely. So touching on that extension and that potential to enlarge the project, recent historic drilling was, as I said, focused on the Crawford resource. We did some extra drilling and in 2023 discovered the Miranda prospect. It's a fresh rock target. It's a little different to the oxides. There is some interesting geophys going on underneath there. I think the graben's running from the north to the south and may well be concentrating supergene from that pressure. We don't know yet. We need to do some extra work. We've still got the 500-metre northern corridor to infill drill. And we've also got the southern corridor, which is open at depth and along strike. So lots to do here, lots of exciting stuff, lots of good gold coming up for Crawford. And we're looking forward to guys jumping on board and joining the ride. I mean, at the end of the day, what we really want to do here is create a company that creates cash flow within that first couple of year period, which we're almost there, we might get a bit over time, and then looks to reward shareholders. We might receive dividends. We may not. We may use it to further the advancement of the project and or look for other projects. But either way, all things being equal, we should be looking at pouring gold in Q2 next year, and it's quite exciting for the company. So thanks for your time.
Thanks, Daniel. First question, probably an obvious one. How do you get your hands on such an interesting project?
Yeah, so it is a good question. I developed a private project 6 kilometres west of Paddington 7 years ago with a consortium, and we privately mined that through a nearby mill. I was looking to do the same again with the Crawford resource. It actually came out of King West, so I helped the IPO of as well. So I liked the resource, I liked the area. I knew I could monetize it. We were looking around for options as a private venture, and at the end of the day, with Mount Morgan's falling over, it just became too hard for us, and we took it to market instead. And it was right around that horrible period that we touched on, where interest rates went up and everything went down in April, and we floated in June, and the market decided they had gold fatigue, even though the gold price is 2,500 US, 2,500 Australian, so go figure. It's since obviously increased, and I'm quite bullish. I always thought it was going to hit 3,500 this year, but I think it's hit a little earlier than I expected. However, I think it's going to stay around those rates for the foreseeable future and onward.
And in terms of funding, how does funding look?
If the funding looks good, so our max drawdown is 13 million on this. We can gear to reduce that amount, but it's not a massive stretch to look for 13 to 50 million, 15 million, I should say, to debt fund the project. That's what we're looking at. There will be some equity, so there'll be a chance for people to jump in. I'd like to let more retail get on board, but at this stage, having only just sort of finalised the reserve and the PFS and progressing through the mining approvals, we've been focused on that. But obviously any sort of debt we get would be contingent upon approval, and so that's why we're really focused on that right now. I think the debt side of things will take care of itself.
You touched on approvals. How does the WA approvals process work, and how confident are you of getting through it?
Yeah, there's a little bit of overlap between some of the project permits. So there's a mine proposal, a project management plan. They're the two main ones. They do sort of overlap. So it's a little inefficient there, and that is being tidied up. But it just takes time. It's about 3 to 4 months to go through and do all those reports and procedures. And then you've got the really big one is the mine closure plan. You've got to make sure you tick that. So we're just going through and making sure we're ticking all the boxes right now. We're finalising 1 or 2 things that weren't quite complete, like the surface water and the subterranean fauna. Again, nothing really looks like it's on the radar. I mean, this is the most brownfields new gold mine you'll find. It's had a history. It's in a well-known area, and it's been drilled out quite extensively.
Final question. You did touch on always having an eye open to opportunities. Clearly getting this project into production is the focus, but do you keep an eye out for what might be around the corner, or how to bolt on further assets or opportunities into Cavalier?
Yeah, absolutely. So Leonora's got quite a lot of private tier prospectors getting around, not just other companies like M2M or Kin looking to sell their assets, as I did recently. There's a lot of options for us to look to expand and to pick up some extra ounces. I mean, there's 118,000 ounces here now, and it hasn't had what I would call extensive extensional drilling. It's been really focused on that sort of singular area of high confidence. When you go and mine something yourself, you want to make very, very sure that you're confident in what you're doing. So I think short answer is yes, we will look around for other potential bolt-ons. But at this stage, yeah, the focus is let's get those approvals done. Let's start cracking it open, getting mining and pouring some gold in Q2 next year.
Focused on pouring gold, hitting the market at the exact right time. Exciting times ahead for Cavalier. Daniel, thanks for your time.
Thank you, David. Thanks, Henley.